So basically, we are live. We are live. Exciting stuff. The last live that we had was 4 months ago, and now we are live again. Which is very exciting. Um, I want to be more consistent with the live sessions for this, you know, month and next month, the whole month. Yeah. So if you haven't joined the Telegram channel already, join the Telegram channel. Be part of, the latest updates that we're always releasing with CCI. Or you can also be part of the YouTube community by subscribing to our channel, or you can also be part of the private mentorship, or the people that are in the execution lab that gets all our breakdowns of everything that we are trading and looking at in the market. But if you don't have money to afford all of those things, the one-on-one, the mentorship, the trading, group where we're sharing our entries and stuff, you can basically, just be part of the communities, and you can watch the live sessions, and you can learn one or two things from that. Yeah, basically. So you don't need to rush with anything. There's no rush. Yeah, so I'll also drop a link to I'll try to drop the link to what's this thing. I will try to drop a link to the ProFirm account so that you guys can be able to join the funded prop firms that I use, or you can just click, on that link that's in the description, and then it will take you straight to all our services and everything that we're using currently. Okay, so like, share, and subscribe, guys. If you've joined, we are live for the New York session, so we still have a few hours left before the New York session starts. And yeah, so pre-market, I may say, us just preparing ourselves for the pre-market, for the pre-US session startup. That's not only if you're day trading. So if you're not day trading, you don't need to know the pre stuff, Yeah, so if you're not part of the day trading crew, you can just look for long-term analysis and stuff. And I have also been looking at some long-term stuff on other pairs and stuff. So I'm also going to share that with you. I'm actually looking for flight tickets. There's somewhere I want to go. So I'm like looking for that. Guys, if you have not also, if you did not sign up for our psychology channel, you should do that. The psychology channel is very important. You know why? It helps with, traders mindset and all that great stuff. I help people to get educated in the psychology, because you see, most of the trading and most of this whole trading thing is mainly about your mindset. If your mindset is right, then you can easily make money. But if your mindset is a bit crooked, then it's difficult for you to be successful in this industry. So I'm not only focusing on, giving you, the information that you need, but my focus is also to help you understand, that as a successful trader, you need the right mindset for you to succeed in this industry. Because if you don't have the right mindset, obviously, it won't be easy. It won't be easy. It'll be very difficult for you. So your mindset plays a big role in you becoming a successful trader or a profitable trader. Number one, your mindset, and also your money management. Okay, money management and mindset. Those are very important things if you want to be a successful trader. Because if you are not having realistic goals set apart, realistic ways of approaching the market and realistic ways of looking at the market, then it'll be very difficult for you to be successful. So like I know a lot of people that don't know how to manage their money, but they know how to analyze the chart. You see, so they can be very good at analyzing the chart, but then they don't know how to manage or have realistic expectations in the market. But then I know people how to manage their money, but they don't know how to trade. So I'm basically just here to help you balance that mindset so that you can be a trader that can like succeed, in this industry. So I just want to clean my chart. Where is that object tree? Yeah. I just want to clean all my charts while I'm like talking to you and then chatting with you a little bit. I think I must get some background music. Wait, let me get some background music. Let's get for us some background music so that we can see. I have some music here in the background that I have, but I hope that they will not copyright me. I hope that they will not copyright me because I have some background music over here. Yeah, so as I was saying, mindset plays a big role for a trader's success, Mindset plays a big role in your success. That's why you can see someone that has been trading for only 1 year can be more successful than the person that has been trading for 7 years. The person that has been trading for 7 years can be a loser, not because he's cursed, but because of his mindset. When you have the wrong mindset, there's a high chance that you will fail in this industry. But if you have the right mindset, then you will, easily succeed in this thing. Let me just quickly check. Where did I put my sounds, my trading backtracks? I have some music here that I use for trading. Yeah, I've got some music here. Oh, let me play it with iTunes. Just reduce the sound a little bit. Let me reduce the sound a little bit, and then let me allow you guys to hear. There we go. I hope that that's not extremely loud. Let me just see on the stream here, guys. Like I don't usually stream, so like this is I'm gonna get used to this thing of like going live and then streaming and all that stuff. So my brain is not yet. Let me see, where's the stream? So bear with me. I want to see. So my brain is not yet. Let me see, where's the stream? So bear with me. I want to see. Oh, okay. The live looks good, by the way. The live looks good. Oh, let me pause it. It looks good. I like the quality of the live. Wait, look. That's good, right? Yeah, so that's good. Very good stuff. Amazing. I like the quality of the live. I like the quality of the live. I hope that the music is good. Write in the comment sections if the sound is okay, if my mic is balanced with the background music, if the background music is not that loud. So just talk to me, let me know. So we are going to be analyzing a few pairs right now. We're going to be looking at starting from DXY, and we are going to look at the overall long-term view of the market, and we are going to go down to the other instruments as well, forex instruments. I will not go into direct entries because of you're not in the mentorship, so basically yeah, but I'll be going into DXY, and let's look at DXY. So I'm gonna start with the weekly time frame. Basically, we basically know already what's happening here. Longer time frame market showing bullish movements. Price looks bullish, and it makes sense to look for buys on this type of setups. Yeah, it makes sense to look for buys. Last week's candle was bullish. The previous week prior to last week was more of a retracement, you know, so you would basically see price doing this thing of, you know, doing that type of a movement, impulsing, retracing, and then impulsing, right? So we are basically seeing now that type of movement over here. This red candle is just showing us how price was retracing in that region. So since we saw that retracement movement in there, obviously we saw the break of structure. So we said we see the internal structure, and we also see the external structure over there. There are two structures, the external structure and then the internal structure. So both the external structure have broken structure, and the internal structure is also having a break of structure inside there. So once you go to the higher time frame, then you will start understanding what I'm talking about there. It will start making sense to you once you go there. So now we have to see where price is going to react from, so that we can start having our, you know, retracement. So this is too early for us to see that type of a movement. Basically, probably from this POIs long term, then we are going to see price reacting to those POIs right there, you know. So one of these POIs right here can be used as reaction points, you know. So meaning that we see price, you know, reacting from any of those POIs, coming back and then going up, or we might see price reacting from those POIs and then going up. So that type of a thing, that's basically what I'm expecting. So we're still bullish and expecting bullish movement in the higher time frame. So once the higher time frame is bullish, so what I basically do is I write on my notes, okay. I take my cookie and I always make sure that I note it down, okay. So I always make sure that I note down, I write down and say DXY on the weekly time frame is bullish. So I've indicated now on my board that it is bullish on the weekly time frame. So bullish bias, I go to the daily time frame. So now the difference of the daily time frame is that it shows now the break of structure. So there's a high chance on the daily time frame that we might see price retracing to go up, but that can be Monday, Tuesday, but there's no internal break of structure yet. So as long as price is still inside of this range here, we can still see price going and then taking out these highs over here. All right, we might see price taking out those highs over there as long as this low is not broken, because price moves in highs and lows. Okay, price moves in highs and lows, you know, and when the low is broken, then we change the direction. So we did not see that instance yet. So mentally we also prepare ourselves to know that there is a chance that we might see price dropping, but there's no indication yet. And the daily time frame is still showing bullish. So I indicate on my daily. But then I also write in my notes, there's a chance that price might retrace short term. Okay, short term retracement in order for price to continue going up. Yeah, so I've indicated now that. Let me just clear the other things that are not supposed to be on the board. I personally use a board. You can use a notebook or something just to indicate, you know. You can use something else to indicate, and then, you know, to make sure that you are clear about your bias and what you're looking for in the market. So weekly, we see that price is bullish. Daily, we are bullish, but short term, we might see a retracement. So what days, like today is already Monday, so we might see Monday and Tuesday being retracement days, and then Wednesday, Thursday, Friday being bullish days. Or we might see today and tomorrow price pushing through bias, and then we may see, you know, price retracing. So why? Because it's a break of structure. So since it's a break of structure, those are the things that we are looking for, things that we know might happen in the market. So we have an idea of what we are looking for in the market when we are trading large instruments such as so. Yeah, so basically that is what we are looking for right now. There are days the price is just retracing. That doesn't mean the market is in a bearish momentum, or that doesn't mean that the market is going to be selling. Okay, and those are one of the small mistakes that many traders in the beginning stage make. The example that I can use is, you see price retracing here, right? This was a whole retracement that you see in price. The same thing, that's what price can do, you know. Also here, price retraces, but when price is in a retracement phase, doesn't mean that it's selling long term, right? Because the internal structure can be retracing. So you can see the difference between retracement and consolidation. All right, this right here is a consolidation, but this right here is a retracement. Okay, so you can see that this is a retracement. All right, this is consolidation. Why? Price is moving sideways. Here, price is moving downwards after a break of structure. So after you see that there's a break of structure, you see price, you know, coming down, touching this demand zone, and then buying all the way up. But here, price is not even coming up to the demand. You know, there's a demand zone left over here, and price is not even coming back to that demand zone. All right. But after retracing, consolidating, price goes up. But in this case, it creates a demand zone and then comes back, touches the demand zone. And look at this, it reacts from the supply that is over here. So price comes to react from the supply zone that is over there. It might sound a little bit confusing, but it's the basic market understanding. Usually when price is about to make break of structure, because of how you have been taught, you see the price making impulsive move, then retracing, and then creating the impulsive move. That is the textbook knowledge. That's how you have been taught by traders. That's a textbook, the basic, or let me say the theory. But in real life. It's not theory. It comes to the break of structure area where it's supposed to break. It makes a false move to make it look like it's selling, so that the retail traders can see this as a resistance or support or whatever they call it, and then price takes that area out. And we as institutional traders call it liquidity that was created so the price can go up. So this is just price creating liquidity above here, okay, at this region right here. All right, so that is liquidity being created so that we can take out that liquidity over there. So when price is retracing like that, it's creating support and resistance for the retail traders, so that they can say first touch, second touch, and then they can even, some can even go to the extent of taking this area right here and marking the whole area to say that first touch, second touch, and then third touch to drop. So, but we know first thing first, what is the number one thing? Structure. Okay, after you understand structure, then you understand how the market moves. Once you know how the market moves, it's very difficult for you to be fooled. It's very difficult for you to be fooled because structure is king. Okay, market structure is king. That's the most important thing. Okay, so structure is very important. If you don't understand structure, you are actually very behind with the market. That's just me being honest. If you don't understand the structure of the market, you are doomed. You are finished, because most probably you're going to be entering wrong trades and your analysis is going to be skeptical. But once you understand structure, then you will be a better analyst. Before you can think about risk and all that stuff, the first thing you should think about is your structure, understanding your market structure and being able to know where the market is going. Okay, you don't need to find the right entries, the sniper entries, all that stuff. Just understand, where do you think is the market going to go? Okay, what are the probabilities of what price is doing now? And once you can easily like predict the market, then we can now move on to the next phase of you now finding daily setups or monthly setups or weekly setups, because it's very difficult when you don't know where price is going for you to be a good trader. So we already established now a foundation of knowing that, you know, this was the high, price came, created the low, okay, took out that low. Usually we were supposed to see price not taking out the high, which is over here, but price took out that high. That shows us a change of character. And since we see now that change of character forming, now we can see that, oh, there's a change of character over here. Price has changed its character at this area here. It took out that high. Now what are the highest probabilities of setup we are going to look for? A retracement to buy. Where is price most likely to retrace to? Where there's inefficiency. So price usually retraces to places where there's inefficiency. Okay, and once you start, you know, taking out your Fibonacci and you start drawing from the low to the high of where price is broken out after price started retracing, you can start trusting your 50% Fibonacci areas on the higher time frame to be places where you can see, you know, price retracing too. My music is becoming a bit loud, irritating me. Okay, so now me knowing that this is inefficiency and price retracing to the inefficiency, and it's at the 50%, anything that is at 50%, I know that there's a high chance that I can be able to buy from there. Now this is not me talking about ranges and all that stuff, it's just me basically talking about market structure and the shifting structure. So we see the shifting structure over here at DXY, and then we see price retracing to that shifting structure area and giving us a demand zone from where we can start purchasing from, you know, where we can start buying from. Okay, it gives us now a lot of days of buying. Okay, so if we can see how many days it has given us, 48 days. All right, 48 days of buying but in simple terms, 34 days, you know, excluding the weekends. So we're having 34 days of bullish market momentum, and if we can discount from the 34 days, the red days, which is 1 2 3 4 5 6 7 8 9 10 11 12 13 14, you know, so those are now 14 days of price not moving up. Okay, so then we can basically start doing the math. 34 minus 14, 20 days of bullish movement. So let's say that you took 34 trades in 34 days, and you lost 14 days and you won 20 days. So let's say that every day that you're winning, you were making, you know, 3%, and you were risking $100 to make 300. So 20 days you're making 300. Okay, 300 times 20, 300 times 20, that makes you 6,000. all right, and the days that you're losing, you lose $100. So 14 days of losing 100, so it's 14 times 100. 14 14 times 100. Approach trading, that is how we want to approach trading and how we want to look at the whole trading thing. It's very important that we look at it in that sense, in a professional way, not us gambling and thinking like, oh, we're going to be right every day, because I want to build traders that are focused on trading large accounts, you know, traders that are managing larger accounts. And for me to be able to build that type of people, I need to teach them about probabilities and strategic trading methods. I don't want to create an hype, because I believe in things that you can do continuously over some time and that can continuously make for you money. Realistic things, you know, when you are trading realistically, we can make money, you know, in a realistic sense. But if it is more about things that are not consistent, then it becomes a bit difficult for us to work together, you know, because flipping accounts is very fun. I do it for fun, or I do it, you know, because I have the skill. But what makes money is things that you can see over a month, you know, over 6 months, over a year. If you can see all the trades that you've taken on a specific account over a year, how much have you made on that account? Or over, you know, a month, after every 30 days, how do you perform? How many trades do you take? How is your performance? That is what I focus on. And trading is a career. Trading is a skill. It is a job. It is not a hobby, and I don't want people treating it such. So that's why I created a psychology channel. Let me see the name. What's the name of it? The psychology channel is Trading Psychology CCI. Okay, CCI Trading Psychology. So Trading Psychology CCI. You can just search it up, and then you can go and follow that account. What do I do on that account? I just record myself talking about my days, what I go through in the past, and also what I'm going through currently, trading wise. So that will also help you, you know, to learn from my mistakes, and also to see the failures and the successes that I have as a trader. Being professional means that you're not focusing on a lot of things. You're focusing on a small number of things. Okay, you don't focus on everything. You master one thing and then you start building upon that thing. Like example now, the worst time that I as a trader would be trading, you know, with high risk is this time now on the market. Why? Because price is broken structure. So me now looking for buys is a 50-50 chance, because price is broken structure and price can literally, you know, consolidate during the daily time frame. And that's why you can see, if we go on the 15-minute, we see price doing stuff like this, you know, on the higher time frame. We see price consolidating a lot, and that is a result of why? Because price is at an area where it's not supposed to have clean price action. So usually price has disruptive price action at what? Consolidation areas or at areas where there's break of structure. All right. So usually when price has broken structure, like here, you see here, it is broken structure here. It usually consolidates. All right. You see it consolidating, and then makes a little bit of movement. And then once people have blown their accounts because of frustration, price goes up. And that's a whole psychology with this thing, you know. The same thing as here. Price is now going to cause a lot of stress and anxiety. And most of my losses as a trader has been experienced in those seasons where I was just trying to force setups while price has broken structure. So I tend to avoid, you know, that type of thing. But now we can see now this is a different pair, obviously opposite from DXY. So now we saw DXY basically here already, that it is still bullish, and we're going to look for bullish movement on DXY mainly, unless I told you on the daily time frame that these lows that I showed you are broken. So we want to see this daily candles low being broken for us to start, you know, looking for downward movement, and then we can, you know, look for retracements and then continue trading forward. So basically this is the internal low, and then now looks like the internal high, but it's not guaranteed until price did not break this low. So we want to see price breaking this low, internal shift, then we look for retracement. You know, there's a demand area here. If we see an internal change of character, then we can start, you know, retracing to look for higher movement over here. Or we might see price continuing, you know, to continue to going down up to this demand area over here for us to see price going all the way up, to respect the structure that is in the internal time frame, you know. So now you see we are now, that is what analysts do. Analysts plan the market. They look at possibilities of what can happen in the market. Now we know as analysts that we are not going to be over risking at this time. Now here, any setup we find here is not going to be high risk. Why? Because price is at a critical place, and when price at critical areas, we don't risk a lot. We take small risk, so that when the good days come where we know price is consistent with a direction, then we can literally go all in. And this is where many traders mess up, because they think that every day is a big day. Every day is not a big day in the market. I personally don't have big days every day. I have small days, and then they later become big days in the market. And that's how I build my portfolio. All right. There's a challenge that I'm getting funded with, and basically what do I do when I'm like getting funded with those challenges? I take the longest time to pass them. Like I take a month to pass one challenge. Why? Because I am professional. I think differently. I'm not thinking short term, I'm thinking long term. But also I know how to be aggressive, and I know how to be lenient. There are times that I'm very aggressive, and then there are times that I just take it one step at a time, because the market is speaking and I'm listening to what the market is saying. Okay, I don't just enter trades and then open high lot sizes, or enter in the market and then start risking a lot of money. No, I risk where price is giving me potential. I risk where I know I have more confidence to go deep, you know, blues, to see deep blues on the market, because I'm training my psyche and my psychology, so that my psychology can be stronger, because I'm trading a fund. I'm trading funded, you know, accounts, and I'm also trading funds that I'm managing for, you know, clients, for liquidity water associates. So when I'm managing large funds like that, I need to be at my best behavior, or I need to be at the best performance. So the greed and the desire to be very profitable can be very dangerous to a trader. It can be very dangerous to your success. It can be very dangerous to, you know, you're achieving. If you have $500, you should be happy with making $1,000 and maximum making 5,000 per month if you can grow it effectively. The most difficult time is going to be the first 2 weeks of that. You know, the first 2 weeks are going to be difficult because you're now focusing on growing the capital while preserving it, meaning that you are risking $50 to $100 per setup so that you can be able to grow the account. And then the last 2 weeks of the account is now to just risk your profit, not your capital. So you remember that your capital was 500 and now you've grown your 500 to 2,000. Now you know that it is only, you know, 1.5 that is risk. Okay, 500 is the capital, you know. So now you are only risking the profit and not risking the capital. So while preserving the capital, you are now risking the profit. And that's how professional traders look at the market. That's how professional traders address, you know, the professional market. And so when you're a professional trader, you're not affected by the seasons, whether it is good seasons or bad seasons. You're consistent throughout because you are mechanical. You're not trading based on emotions. You're not trading based on what you feel. You're trading based on the market, what the market is showing you. So mastery takes time. That's why you cannot be trading all these instruments that you see on my chart right now. You cannot be trading all these instruments. You have to master some, and then whilst you are trading what you have mastered, then you can clean your arsenal. You can do more back testing, data collection, analyzing the markets, going back in history. How did certain pairs perform in certain times? That is now what you do when you are starting to learn about that instrument and that pair, how it operates, the weaknesses, the strengths. Those are the things you learn as you grow your portfolio. Okay. Yeah. So also guys, when you're starting up in your professional career of being a professional trader and approaching the market as a professional, it's going to be a bit difficult for you. Why? Because it's going to take some time for you to start seeing progress, because you are dealing with less money, less resources, but time will be your friend. When you do things the right way, always, it's not easy. Okay, let's say for example you have a 100k account that you bought from the prop firms, and you're managing a 100k account, you know, and now there are certain type of setups that you're looking for. So what I basically do is I take screenshots of the setups that I'm looking for. So let's make an example. Let's look at Euro USD. Okay, daily time frame. So Euro USD has been making beautiful setups right here. Okay, so we see this is a bullish retracement, all right, and price retraced, you know, all the way up to here. So we can see price retracing, boom, okay, touching that. So that is now mitigated right here, and then we see break of structure. Okay, after break of structure, then now the next zone is over here. So now when we see this break of structure right here, okay, when we see this break of structure, okay, sorry for the ugly drawing, but once we see this break of structure right here, what is happening next? Retracement. Where is it gonna react from? One of the zones. Okay, so we see at one of these zones price is reacting. It did not react from this zone, but then it reacted from this. That's why we first name them POIs, point of interest. It's not basically where we are exactly looking for price to go from, but we see it as a point of interest. It becomes a zone when it is proven. Then it's no more a point of interest, then it's a zone. Okay, so once price starts to show us that it's no more a point of interest, then we can okay, price came and touched this area, we saw internal change of character, retracement to buy. you get stuff like, okay, let me just make you understand, simple understanding. Okay, here we go. So after price came and then touched this demand area right here, okay, this is me showing it to you on the 4-hour time frame. Price came and touched this area right here. Okay, now we see price creating this high over here. Okay, high. Now since price created this high, this was the low. Okay, low, break of structure, high. What were we supposed to expect? We're supposed to see price, you know, going up like that, but then it shows us it's failing to break this area. Okay, so now we are seeing, oh, price is failing to break this region right here. Okay, it's failing to break that area right there. So there is a high chance that price will fall and break out this area, because we see price was selling. Okay, price was selling. We want to see selling momentum, but then it repeats the same thing again here. It fails to break that area. So now the price is failing to break that area right there. That shows us the price is in a retracement mode. Where is the first area we're looking for? Liquidity. Okay, we're looking for liquidity to be taken out there. So let's just say that you are still contemplating and you're finding it difficult to go long here, you know, to buy off this area right here, despite the fact that you saw price made a break of structure, and you know obviously this price did not retrace fully. All right, you know that this is like the demand, sorry, the supply over here. Okay, you see the supply over here, you see the break of structure, and then after break of structure, what must price do? Price must retrace. After every break of structure, price must retrace to sell. But you ignored all of that, and then you said, no, I don't think that price is gonna buy from here, you know, after touching the demand and after showing you all of these confirmations. Let's just say that you were scared of taking this buy. The next confirmation that we find is over here. Okay, price literally coming back here, inefficiency touched over here, and internally you can now start looking for buy setups to take it at least up to hit there, right there. So now you see, let me just mark those areas for you there. Boom. And then I also mark for you this. Okay, so that is already marked, inefficiency in that. So once I go on the 1 hour, or let me go on the 30-minute time frame, then you guys can basically see setups forming everywhere. So the first setup here, right at the demand, beautiful setup right here. Okay, beautiful setup right here that we take up to the supply so that we can sell off. Because why? Break of structure. And what? Inefficiency. So price is to cover that inefficiency. Okay, so basic ideology stuff. And then now, since you did not find this setup right here and you are late to the market, okay, then the next entry is where? Inefficiency, like I told you. Liquidity right here, liquidity taken out, price coming back, you know, and then making this break of structure right here. Okay, break of structure there, boom, price coming back to the same area. Where's the demand? So number one, price touches the inefficiency. Number two, price breaks structure. Number three, price comes back to the demand. So that demand makes it your ultimate entry area. You'll be experiencing a little bit of drawdown, but then basically you see price going up, okay, and then reaching your area of confluence. So once prices touch that demand area, we are no more looking for more buys. Okay, even if price comes back and then gives us ideas, now our mind has changed. Why? Because inefficiencies made this break of structure right there. And what are we looking for? We are looking for price to take us home. Okay, short positions. If you are more conservative, then you would be looking for, you know, exact trades to sell off right here, you know, to look and sometimes it's a bit risky, because once you are conservative and you know this is your supply of the higher time frame, sometimes price can just take you out and then continue falling all the way down. Because remember, survival of the fittest. All right, so this is our target. And why are we targeting here? Because there is liquidity down below. Remember last time it failed to break that low. So since it failed to break this low right here, this has become liquidity down below. So that's how we see in our price, basically using this area, this demand area, sorry, the supply area as a region from where it's starting to sell. All right, so you as a professional trader, it's your responsibility to make sure that at least your stop loss is a bit wide, you know, to protect yourself from fluctuations, because this can also look like liquidity or above here. Price can come to, you know, look for that to go down. It's not in all the cases, but in some of the cases it does that, securing 7% on the setup and then goes a bit more lower on that setup. So basically last week I was in this setup, and I also shared on the market review, the video that I released this week. You can basically see me dropping all that gem and all that information for you, showing you that EURUSD setup. So that was my whole mindset behind when I was looking for that setup. That was my whole mindset for when I was looking for that setup. So that's why I said that it's not every trade where you need to risk a lot, you know. Like for example, this type of setup, this is a setup that is against the trend, okay, and it's at the last level. Like this is stage 1, this is stage 2, and then there's stage 3. Stage 3 is like a C setup, this one is a B setup, and this is a C setup, sorry, an A setup. So even if I'm trading against the trend, I would be happy to take this setup and to risk some money on it, you know, because it's a setup that makes more sense, you know. But this setup also makes a little bit of sense, but I'm not risk the way that I'm risking on the A setup. But this one is a trade that I will not really risk on because it's having full surprises. So when we see price doing big candles like that, we always like to say, oh, the news is against me, the news is trading against me, oh, the market, the brokers hate me. No, basically it's not the brokers that hate you, you're against the trend. You do not understand the trend, you do not understand the movement of the market. Most of the time you are focusing on the noise, you are going on the lower time frame and focusing on the lower time frame. And when you are on the lower time frame, your mindset gets affected, you see, because the lower time, just imagine if I'm zooming in on this lower time frame right now, I'm seeing a lot of candles forming. And remember, this is a 30-minute time frame. Like one candle takes 30 minutes to form. So this is very stressful for me to have a broader mindset, open minds, because in real time, like for 30 minutes to pass by, it takes a lot of time. So I would be looking at one candle and then making a decision based on that candle. And that's a very stressful way of looking at the market. That's why it's very important to only go down to the lower time frame once you have made, you know, or once you've seen a huge amount of progress on the higher time frame. The higher time frame should show you progress before you can move to the lower time frame. So it's very important for you to be consistent, okay, as a trader, and for you to, you know, be a professional. Remember, your aim is not to show off charts and MT4. Your aim is to survive, so that when the good days come and the good years come in your career as a trader, that you will be having enough capital to take those moves. It's not all the setups that are profitable, but then there are those setups that will like make you a lot of money. So while you're waiting for those setups to form, like you see, this type of setup is a $1 million setup that you can wait for. You know, why should you risk a lot on this type of setup? You see, this, the trend is a downtrend, okay, and now this market is retracing. Why would you risk a lot of money on the downtrend, opposite direction setup? Downtrend, market is buying. Why would you risk a lot of money? Why would you not wait for the downtrend setup to form so that you can risk a lot of money on? So those are one of the things that can help you so that you can be a professional trader in the market. Okay, I hope this video was very insightful for you. Yes. Yeah, so there are certain decisions we cannot make in the market unless we see the higher time frame confirming it. So now you see most of the money has been taken here. Most of the money in the market has been grabbed and destroyed in this area right here. Why? It was consolidating and creating a lot of chaos. So the most unprofitable time to trade Euro USD was this time over here. This whole time price just consolidating, and if you are trading and surviving in the market, this is where you lose everything. This is where you lose your savings. Why? Because you are not trading as a professional. You are trading to survive. When you're trading to survive, you will learn one or two things in the market. It will discipline you. So we don't want to survive in the market. We want to be profitable traders that are not survivors. We are trading based on, that's why prop firms have been created. The olden group of traders, like for example, I'm not an olden group, but I started with the olden guys while there were no prop firms. There were only like 2 prop firms when I started. It was FTMO and it was I forgot the other one. It got closed because of some jealous people. But when I started trading prop firm accounts, or when they started selling prop firm accounts, it was very difficult to buy them, because now imagine we're only trading live accounts, and the live accounts that we have is like penny, like it's like less money, so it will be difficult to buy a prop firm account, and they were having so many restrictions. It's only now that competition went up, and now because they saw competition in the industry, that they started reducing the prices of the prop firm accounts, because there are now so many people offering the services, and now they have to compete. So the market started dissolving, and the market started becoming better for the retail traders. But in those days that I started trading, it was the days of cash flow, and all of those guys that were trading the market. And for you to be a successful trader, you needed to have a lot of money, because it was difficult for you to trade the market. Obviously leverage was there, and all those things were there for you to be able to trade and open risky trades, but it was not easy as it is now. Obviously, so at the time that I started accessing the market, I believe that it was early end of Barack Obama's presidency. It was ending, and when Barack Obama's presidency was ending, the market was a bit stable. When Trump came in the market, chaos, and then Biden came in the market. Biden's presidency came in, and then Biden was a bit stable. So Obama's market was very stable. Then Trump came, chaos upon chaos, but it was very volatile, just like it is now. And then after that, we started seeing Trump coming back after Biden, and now we are seeing chaos again. So I've been through the brutal training of the market. Usually the market would respect many things in the textbook, but it was the time I started learning, it was the most horrible time to ever learn the market. So the traders that are actually learning how to trade now are learning at the best time, because it's the Trump market that is not ruled by fundamentals solely. It's not ruled by technical solely. It's now ruled by fundamentals, or let me say by Twitter and Truth Social. So because Trump would type crazy things, and then the market does not care if it is an uptrend or a downtrend. It just continues going to that direction. But the good part of the presidency of Trump is that there is a federal agency which is called the Fed. So they try to control interest rates and all that stuff. So if people are selling the dollar, it's consistently selling. If people are, because if dollar sells, then we know euro is going to, buy, and AUD is going to buy. And then we know that NZD is going to also buy. But then we know all the other US dollar pairs are going to sell. So that consistency is still a bit there, but he can control how long the retracement is, so he can manipulate those small things. So now, if you are not sure of a setup, and you know that this setup is not really going to make me money, Are you going to focus on what you're feeling now and then ignore the fact that you can still be successful? So all of these things are up to you. Do you want to be successful as a trader, or do you want to gamble? If you want to gamble in the market, you can waste your money, and then after some time, then you start claiming that forex is fake, that trading is fake. But if you are a professional trader, you will be realistic with your capital, and you will treat your capital right. Two wrongs don't do right, you know. But if you're consistent with your craft, then you can literally become a very dangerous, consistent trader that can, you know, be trusted by, you know, institutions, you know, and you can probably build a career from that. You can build a life, a future from that. You can be consistent to know that every single month I can make X amount, or it can be variable. It doesn't need to be fixed, but it can be an amount that you know that at least every month I'm making 10,000 from trading. Maximum 20,000, minimum 10,000. Or if it is very bad, then I can make 5,000. So that is not something that is built upon something that can be consistently made. Okay, things that can be consistently built upon, things that can be consistently be made. That's what we want to create with CCI. We don't want to create hype. That's why we don't do that type of a thing. We are focusing on building long-term stuff that can last long. So we train people, and we want to make sure that you learn how to manage capital, how to manage. And the best place that can help you to do that is getting prop firm accounts, because when you have a prop firm account, then you can learn how to manage. But before you get a prop firm account, because that's a hefty investment, I know some people want to start with the 200k accounts, or the 100k accounts, or the 50k accounts, because they want to start making a lot of money. But let's just be realistic. Have you made a lot of money with your personal capital? If you have not made a lot of money with your personal capital, it will be very difficult for me to help you to become a successful trader, because with your own personal capital, you like even $200, you cannot make $200 to withdraw for your own self. So that is a bad investment decision to make with your money, to buy a prop firm account. For a month or two at least, you need to be like successful making money from your trading account. And then whilst you can see that you are like successful with your personal trading funds, you see that you are like literally withdrawing 200, 300, 1,000, 2,000, 200, 300, 500, 1,000, 2,000. Once you're like seeing that consistency, then you can go to the funded route, because now you have seen over maybe 6 months or 5 months, you have been withdrawing from your personal capital. Now you can move to the next level of now taking that money that you've saved up from your personal trading to start acquiring a larger account. Because now why? You have a safety net. You have saved up some money. You have got, you know, savings laying down. So once you take the risk of applying for a funded account, then you still have money to live off. You know, you still have money that, like, you will not have a mentality of rushing. Because you see now, when you don't have a mentality of rushing, you will not come in the market now. You see that there's a break of structure right here on the market. Okay, there's this break of structure right here. And then you would be like, oh, there's a break of structure. I want to take this trade. Okay. And then, okay, let's just say that you want to sell. Okay, you take this sell, and then your stop loss is above structure. Okay, let me just say. And then you are, what type of risk reward is this? 1.65. So you would want to force a risk reward that is a bit bigger, and there's a break of structure. And when there's a break of structure, what usually happens? Prices to retrace. So now this is a 50-50 trade. This is a gambling trade. Okay, even if this trade goes down, it's a poor decision to make as a trader, unless you are now taking a trade like this and then you are risking low on it, because you know it's a low probability setup. You know, so on a low probability setup, you can literally take a trade and then you can just monitor it and continue with your day. You don't need to sit 24/7, you know, unless you're back testing, unless you're collecting data, unless you're mastering the charts, you know, unless you're doing all that amazing stuff, you know, preparing yourself for the market. Then like you can sit the whole day, but live a life outside the market. Live a life outside the market. If you don't see your setups, you know, and don't go into other pairs to go look for setups, you know. if you have back tested certain pairs, only trade those pairs. And if there are no opportunities, let's just say after 2 months you're not finding good opportunities on those pairs, then you can move on to the next, group of pairs that you think that you can now trade, because these ones are not having opportunities. I'm just trying to help you so that you can have a professional approach to looking at the market and building a career out of trading, because imagine breakout structure, and now this is the type of setup that you're looking for. This is guesswork with high risk. I would not want to trade a setup like that, to be honest. I would not want to be trading something like that, not in my world. Even if you are trying to flip your account, that's a poor decision to make with flipping your account. So you as a professional trader should know what you are looking for and what you want, and you can only do that once you have enough data. Data plays a big role. Your back testing screenshots, this type of setups, like the setups that I showed you here, this type of setups that I showed you here, those are the setups that you're looking for. This type of setup that I showed you, the main trade to sell it, trading towards the retracement, managing your trade. What if the market doesn't fully go up to the retracement area? What do you do? How do you manage your trade? How do you get back into the right direction? Those are things you're supposed to be prepared for. You're supposed to write those things down. You're supposed to practice those things. You're supposed to assess yourself, develop yourself to be that trader that is prepared. You're not just prepared for the best, to know that, oh, I'm going to be buying this trade and then I want to make profit. No, you are preparing yourself for the trade, how you enter, how you're going to exit in a state of emergency. What are you willing to do? Because when you're greedy, your mind is on one setup. And one setup is the setup that you want to make thousands of dollars. But if you have a target of making every day 1,000 or 500, bro, even if your TP is not hit, you're going to be satisfied. Some days are going to be break-even days, and then some days are going to be extra phenomenon. You're going to hit your TP. So that's how you become a professional trader. All right, that's not the full how you become, but that's how you can build a foundation for becoming a professional trader. A professional trader that's looking at the market in a professional way, that is having realistic goals, realistic expectations. A professional trader that is building a life away from the charts and then managing those two lives with the charts, keeping that balance, because the chart is who you are. You look at the chart the way you look at yourself and your life. If you're impatient with your life, you're going to be impatient with the chart. If you're not having other hobbies outside of the market, you're going to be stuck looking at the market and blowing your money there, because some people, they're not even supposed to win, because once they start just experiencing a little bit of success, they start blowing it again on the market. They take everything, pour it back into the market, and then they lose everything that they've built. I've been looking at one of the companies, and when Bitcoin crashed, they lost millions of dollars because they've been making small percentages. They have been apparently risking properly, but they were not risking according to the potential when they were finding good setups. You should have that balance of knowing that this is a good setup, a great setup, I should risk now. And then while you're risking, how do you protect your capital? How do you play with your profits? When do you reduce your risk? How many times do you need to lose for you to start reducing your risk? How many times do you need to win for you to start taking time off the market to balance? That is the balance you need as a trader for you to be successful. It's not that because you're winning that you need to come back and trade every day. Yeah, sometimes you just take time off, and you take time off the market and you come back stronger. Because your psychology can be affected if you are infected with winning syndrome or losing syndrome. And you can only learn that in CCI. You can only get this type of information in CCI. So if you have some pairs that you want me to look at, just drop in the comment section, and then I will, in the short time that is there, I want to get myself some coffee and so like anything you put your mind to, you can literally do it if you just decide to put your mind to it. So So you see right here, I have a watch list and I have top 6. So now basically I'm just gonna put my Euro USD at my watch list, because Euro USD is not giving me nice setups. Last week it was very profitable, but now it's not. It's at the edge of breakthrough. Yeah, so it is at the edge of where I'm expecting it to go to. It's gonna take out this low only for scalping. Makes sense to scalp here and to take it below here, but there's also a lot of demand at this area. I remember I just took out liquidity here, so we can see it took out a lot of liquidity here below with this candle right here. So obviously we might see price, you know, going a little bit up, you know, so things like that can happen. But like I told you, we're only going to expect that once we see price taking out this high right here. So mental note, I use my notes like this just to say looking for price to break here to have an idea of bullish momentum or bullish direction. Okay, so you see I wrote down my notes and then I became clear. So I will also make sure that I have my annotations to just put price so that people can know at what price, specifically. So exactly at that price. So when the price is broken, then I will be looking for price to retrace and then take it off. So as long as that is not done, we're still bearish. So now DXY is bullish, okay, like I wrote, and then Euro USD is bearish. Okay, so DXY is bullish, Euro USD is bearish. So let me just Euro USD bearish. Okay, conditional at 1.14810. So DXY's direction is bullish. So since DXY is bullish, someone gave me USD CHF, USD Swizy. So let me just drop this screenshot for you guys on the Telegram channel. If you're not on the Telegram channel, just check the description below, and then you will be able to get access to the Telegram channel so that you can see these updates. You can just click on the link on the Telegram, and then you will be taken to our Telegram and all our information. So I'll be dropping that Euro USD there. You said I must look at USD Swizy. I also like to trade USD Swizy those years. Oh, it also, you know, did. So you see, we already wrote on DXY. We said that DXY from the beginning of the video. We say that we want to look at we say that DXY is bullish. So since DXY is bullish, what do you expect from AUD? From USD CHF. So USD CHF is also going to be bullish, because the pair starts with DXY. It's starting with DXY. So anything that starts with DXY, mostly now there's a high chance that it's going to be bullish, right? And we can now basically see that price has been creating, you know, this type of momentum where it is selling and creating liquidity. So this liquidity right here, all of that is a high chance that it can be taken out, you know. So now bullish, yeah, there it is. So after price creating that breakout structure, we did not see price, you know, retracing in a long time. And this is just pressure that was created in the market. So usually we see that type of pressure, you know, pressure, you know, but then the main move was this, and this was the break of structure, right? So we saw the break of structure right there, and then there was this liquidity over there. So once we see that liquidity there, then we know that this is just pressure forming. All we want to see is that change of character, and then voila, then we come to the supply zone so that we can continue meeting this, creating this new break of structure. Okay, so it's still bullish, all right? It's bullish, but higher time frame bearish. So we know price is in a bearish movement or long term, but short term now we are seeing bullish movement, and we also started witnessing price taking out the, you know, the external structure high. So this external structure high has been taken out, which shows us a break of structure, and we also see liquidity, you know, being taken out right there. So this right here, boom, boom. So that shows us the liquidity there. So we see the liquidity being taken out there. So that's a good sign of liquidity being grabbed. And then we see price coming to this demand zone, you know, after forming liquidity and then eventually taking out that liquidity there. So same thing that I showed you when I was talking about DXY. So it's the same scenario, same whole thing of DXY that we're experiencing. So nothing new. Nothing new. Okay. Yeah, so bullish movement in the market on the higher time frame. Okay, but remember now there's an internal break of structure, okay, like I told you. So since that internal break of structure is there, once the current lows are broken, we can see price tracing to go up. Okay, but we're not having that problem yet. So to see, you know, price creating that type of a movement, look at this liquidity that is being formed. Also remember that this liquidity being formed, and usually when price creates liquidity like that, what does it do? Falls all the way down, and then you see it going up. So remember that. So once, and I always remember to say stuff like this, but then people, you know, don't listen. Rally base rally. Okay, so for me, the setup that I would want to look for on the higher time frame is something to do with this. Okay, that's the type of setup that I would be looking for, to look for longs from there to there. So a nice 5% setup. So that's what I would be looking for generally. And this, I would rate this as a B setup. Okay, B setup. If price is very desperate, then quality setup over here, you know, quality setup, A setup right here to take it all the way up. This type of setups are actually setups I love. How long will it take for this to happen? Maybe 2 days, maybe 3 days, maybe never. Okay, that's what planning does. So usually I put alerts on stuff like this, and I see how price is falling down to that region. Okay, so once price comes here, then it will alert me. I'll get an alert from my trading view here on the phone, and then once I get an alert, then I know, okay, I'm now starting to look for bullish movement on the market, you know. So once this alert is hit and I see price, you know, showing me internal structure, I can go on the 15-minute and I can basically start looking for bullish movement on the market, because this is basically just a B setup, you know, and then this is a A setup right here. So this is a B setup right here, and this is a A setup right here. I hope that you are also like learning some stuff. Yeah, so yeah, So basically that is my analysis on so I can just put it here at the watch list, and I'll also be watching it with you. I'll be watching it. Let me just clean it. So these are like good setups that make sense, but there's like some mechanics that go also into it. We don't just start, you know, buying immediately from here. You know, we start looking for extra confirmation. You know, we look for extra confirmation on the lower time frames, because this is like good. This is a good liquidity grab, you know, change in structure, internal structure. So, and then we also see inefficiency right here. So that is a good setup, and this is the rally base rally. So this is also good setup. So these are good setups, B setup and then a setup. So those are good quality setups for long-term trading, okay, for us that are managing large accounts. So imagine now on a setup like this, if you are running, you know, a $500,000 account, right, in rands, for others now that are running other currencies then, but I'm basically talking about the basic normal type of trader in Central Africa. So if you're trading a 500, you know, and then you are risking even a 0.50% on that account, that's a nice 12,000 that you make on the setup, right, like this, you know, while not risking even 1%. You are risking half of the 1% on a B setup. And then on a setup like this, if you are risking 1%, you know, on a 500k on a 500k account, risking half of it again, nice 21,000 on this setup. The setup basically will take some time. It will take maybe 2 days to complete, you know, like you see here, this entry, how many days did it take? This setup took 5 days and 1 hour to form. Tighter, not tighter, wider stop losses, better entries, quality setups. So the same type of thing right here, okay, that I spoke about. So if you can look at it from a higher time frame point of view, we can see this inefficiency right here. Let me 1 hour. Okay, so we saw this break of structure right here, okay, followed by the internal break of structure. Okay, so we see this internal break of structure right here, and then we see the external break of structure. All right, so again now we see price creating liquidity here, and I'm respecting that liquidity by going all the way up, shooting up. We see this liquidity here and price running down to that liquidity here, boom, making the retracement, internal sales, you know, until it comes to the inefficiency right here, right, inefficiency area right here, and now starts buying off the inefficiency area, right. Internal change of character. So this is also a inefficiency right here, okay, and this is a demand zone at the inefficiency. So same thing over here, you see, same thing. Price was consolidating heavily, and then you saw it retracing, took some time to retrace, and then it went up. Same thing is doing now, consolidating. All right, what's the worst thing that can happen? Price shooting up. Would I want to be part of that and have fear of missing out? Nope, I don't care about it. I don't want to be in part of it. Not a quality setup. This is the type of setups I'm looking for. You know, this is the type of continuation setups that I would be looking for. B setup, okay, B setup. This is the type of setups I'll be looking for. These are the type of setups that I am always looking for. This type, you know, these are the setups that I'm always looking for. So those setups take time to form, and sometimes that's why, you know, I always have pairs that I look at during the week, and I have my watch list, and then I have my top 6. So once this thing starts meeting the requirements of what I've drawn over here, okay, I know my inefficiencies right here, and I know where my entries, then it will go from, once the alert is hit, I'll move it from watch list to the top 6, and then I'll move it to the top 6, and then I'll be trading it. Give me one moment. So basically that's the setups that I'm looking for on USD CHF. GU AU. Wait, let me look at AU. AU is bearish right now. If you can look at it, AU is bearish, right? But AU did not break the lows. Okay, it did not break the lows right here. So these lows are not broken yet, so it's still bullish. Okay, the direction is bullish in some sense. The retracement is still not broken, you know, but we see AU, you know, respecting this zones. Let me just get the zones right. Supply zone right here. Okay, price touch the supply zone and you see a strong sell. Okay, obviously we know AU is gonna sell and take out this area. I already shared with you guys that I don't need to go to the weekly time frame. We're at the daily time frame. Gives us a clear understanding of what we're looking for in the market. I don't know why my intervals went off. Hold on, let me get my intervals to yeah. So price responded from the supply zone right here. We see price responding from that. There's still strong low areas right here. We do not see internal change of character yet. So that we can I'm talking about the higher time frame internal, but obviously internal we can see the price has shown us the evidence of retracement, all that stuff. So we can see price, you know, going all the way, taking out these lows and then continue to falling all the way down, okay, and taking out these areas there. So basically that's my whole long-term view of this market. If you want to make sure that you are taking some money out of this, you can probably, you know, go to this supply zones right here, and then you can sell off right there. The inefficiency right there, price dropping from there, and then first TP will be something like this, 4%, not that bad to make from that setup. Okay, so I'll be making a break. I'll be back in a few. The music will be playing in the background, the chat will still be up. Coffee, and then she's gonna get the food and everything. Okay, okay. Hope everyone is here. Yeah. I only need to respond to so basically uh I was looking at what was it? AUD. I hope my tea is still warm. Yeah. So you guys can see that AUD is starting to buy, right? Because I personally feel like this liquidity has to be taken out, and I think since I saw this liquidity taken out here, price did not really sell here, the nice place, but yeah, let me not say it's a good gamble, but it makes a little bit of more sense to start looking for trade ideas from here. Yeah, once this trade becomes invalid, then we basically know price just going deeper to continue falling. Okay, so but that's not what I'm really thinking deep. I'm not really thinking deep about that. I'm just chilling now with that understanding. So what I'll do is I'll just place a alert on here. And by the way, I need to make sure that I have TradingView in my phone. Let me see here, because I was like uploading apps, but I did not get TradingView installed, which is very weird. It's very weird. Why don't I have TradingView installed? Because it's very important for me to get my alerts here. So see, when you're trading like this, you just make sure that you have like mobile data or stuff like that, and then you can like go and do other things, and then you'll be getting alerts. When you get your alert, you basically took notes already, and you know what you're looking for, and that is more of a practical way of trading the market, instead of like sitting the whole day at the chart and trading the whole day, stressing about the chart, like that only happens in movies. So those things only happen in movies. So the AUD, I'm also gonna move it to the daily watch list. So remember, we have Euro USD, where we are saying that once price goes above this area, then we are going to be looking for different direction. Euro USD is basically not having nice setups, low probability setups. Euro USD also would make more sense if we would be looking for sells at over here and over here, just like AUD USD. Okay, because there's inefficiency here, and then you see price doing that, so it would make sense to sell off from here, and then or selling off from here. Quality setups. So again, alert at the first POI, second POI, to see because you see, we want to get home run trades, home run trades. So we have that. We also have the opposite, USD CHF, looking for buys since we are selling on the other pairs, and then AUD USD we are looking for sells also. So now GBP USD, I did not look at where is GBP USD. Where's my GBP USD? Here we go. I haven't traded GBP USD for months, but I can already see the setup. I can basically spot it spot on. I can see. So I basically think that GBP USD is gonna retrace up to here. As you can see, basically price has created this liquidity below here. Oh, so you can literally like successfully trade the market while you're like having your other stuff you're doing for your normal life. You can have a normal life while you're also trading the market, and so it's not 24/7 that you're on the chart when you're trading. So today's closing is gonna be very important for us regarding GBP USD. Oh wait, let me just do this. Okay. Okay. There we go. There we go. Okay. So price took out, liquidity taken out, supply zone respected. So basically inefficiency right here on the daily time frame. I would be waiting to see how today closes. Tomorrow I would be looking for retracement to buy in this region over here. So it's a beautiful buy already showing on GBP USD, which I love. Liquidity taken out right here. So basically that is just what we are going to be seeing on the higher time frame. Retrace to pull. So yeah, price is still bearish. We are just looking for retracement. In order to sell back to the original direction. Remember liquidity over here. This liquidity is going to be taken out. Price is going to sell because the war has started again. You know, the people from Iran did not fully behave. They are not fully complying with President Trump. Oh, I got my trading view. See, I got my trading view. Let me just sign up. Let me sign up. Let me log into my account. Okay. So we are also going to see the same thing that is happening on EURUSD on gold, okay? So you probably know that gold has been buying, okay? Yes. And a lot of people are surprised, why is gold buying? Because of breakout structure, and then basically a retracement to a relevant zone. So a relevant P or I. So we can just mark from this range area up to there. So yeah, so what makes more sense would be this supply area here. I'd be waiting to see what price would do at that 50% supply and also this POI right here. So we have these two POIs that we can look at until we make a decision. So today is Monday, all right? So Tuesday, Wednesday, see price dragging its way all up to there, and then we see it falling, or we can see price, you know, dragging its way up to there and then pulling up. So if price does the opposite, then it means now our whole strategy has changed. Now we're not going to be looking at the market the same way. We're going to look at it differently. So let me just make sure it's on the white. Oh, I did not upgrade my okay, I didn't upgrade my thing, so which means, but anyways, yeah, it's fine. Let me also just copy this and share it with you guys. So that's like the overall thing about gold and where we are expecting to see gold basically here. And the uncertainty of the US dollar is basically going to make people buy gold. But as the war de-escalates, let's just say price comes here and then there's good news about the war, obviously that's going to drive gold down. Like, do you know why gold was selling? Because there was progress in the war, okay? And when people are more invested in the dollar, You see, the dollar has been buying all these days. So when dollar is bullish, what happens to gold? Bearish. Okay, gold becomes bearish. So gold is the hedge of the dollar. In hedge funds, we call it the hedge strategy. So if we are long on gold, we become short on DXY. That's what we do at the hedge funds. Yeah, so that's basically what we do. So I'm just gonna add in my notes. Yeah, so gold analysis check, Euro USD check. So for GBUSD check, AUDUSD. Now remember, if you are day trading, you can basically find quality setups with your day trading strategy by retracing and following up on until we either come to this POI or the last POI. Okay, first POI, which is here. This is the first POI, and then the second POI. So you'll be trading towards one of those two POIs, okay? And then you can now start knowing that price is going to take out this liquidity below here, because we know that there's liquidity below there. So that's how yeah. Any other instrument you want me to look at? So like this approach that I'm looking at is basically just how we trade, you know, as large institutions. It's not how we trade, you know, our everyday accounts. This is how we trade our short-term it's not how we trade our short-term accounts. There's a way we trade short-term accounts, and there's a way we trade our long-term accounts. So this is basically the long-term view of how we approach the market. So that should also be an understanding that you should have. And thanks for the likes, guys, that you have. Thanks for liking the stream, and thanks for commenting, and thanks for showing the support. The support is appreciated. Let me just make sure my phone is fully charged. So what activities do I have during the day? What activities do I have when I'm not trading? So what I basically do when I'm not trading is I'll be reading a lot. If I'm not reading, I would be taking a walk. If I'm not taking a walk, I'll be on the phone talking to people handling business. If I'm not handling business, then I'm counseling people. So it depends on the day, it depends on the activity that is to be done for the day. Not every day is the same. We don't look at every day the same. We don't do every day the same thing over. Like some people are lying to others, like, oh, I wake up and then I do this. It's not true. The day differs. There'll be days that I'll be writing, so that I can make sure that my books are up to date, my writing, and then there'll be other days that I'll be focusing on other companies and other things. So when I'm having a view like this to the market, I'm not 24/7 on the chart like some people are. It helps me to be more profitable. I'm not trading every day. Will I be looking at the charts a lot? Yeah, but will I trade every day? Nope, not most of the time. I'm not trading most of the time. That's the stigma, of the retail trading lies. So, but like many folks will be telling others, oh, when I wake up, I trade. First thing first that I do when I wake up in the morning is I go to the chart, all right? Obviously, after I'm done talking to God, but I go to the chart. I'm talking about work now. So I'll go to the chart and I'll see what is there for the day. I'll put my alerts. I'll be knowing like this is where I'm looking for setups, and then I'll just continue with my day. Okay, then I will come once in a while, look at the market, because my entry time frames, my lowest entry time frame is basically the 15-minute. The 1 minute is only when I'm scalping, or when I'm like, when I see that the price is where I want it to be, then I would be trading on the 1 minute time frame. But most of the times I am busy, looking at price on the higher time frames, and I'm focused. Now one thing you need to know about these two pairs, the Euro USD and the GBP USD, they have positive correlation, but one moves much and the other one will move less. When one moves less, the other one moves a lot. I hope you're getting it, because you see, like Euro US is buying right now, but the strength of from where it is buying, okay, you see that it's like buying is now a good setup for like us to say, no, we're going to buy up to here, all right, which is a good buy setup right here. Check it up to here. Good risk reward, 6% being made, because we're like trading towards one of the POIs. So Euro USD, because of the breakout structure right here. So Euro USD is now a better trade setup to go into than GBP USD. Why? Because you are late on GBP USD. GBP USD already played out in the London session, right? So the London session price already played out. New York session, it just made this retracement. It's going all the way up. It's pushing up. But Euro USD is now giving you the opportunity that if you are late, you can still enter. For those that are entering right here, we just have like a bigger stop loss, or they can like start placing a stop loss like this, and then their risk reward will just now be a bit more, 5%, which is not that bad. It's a late entry, late approach to the market, but also not that bad. The worst thing that can happen is to see price coming back, taking you out, and then going up. That's the worst thing that can happen. So sometimes for the sake of that, you have a bigger stop loss, and that affects your risk reward. Okay, at least maintaining a 3%, it's not really that bad having a 3%. But my approach basically would be at the zone, and then taking it all the way up to that area there, to take Euro USD all the way up to there, or waiting for the break of structure to be made, because there's liquidity right here, and then after you see that liquidity taken out, looking for a small retracement and then entering to take it all the way up to that area right there, and then you put your stop loss below structure, and then you still have a 8% trade, which is nice, not that bad. So it just depends on your perception and your risk appetite, you know. But remember, counter trend, so you're trading against the trend. All right, so when you're trading against the trend, instead of making 8%, it's better to make 4% on this setup. So if you were risking originally, you risk half of what you're supposed to risk so that you can make 4% on an 8% trade. You reduce your risk, make your risk a bit smaller so that you can make a return that makes sense, because you're counter trend trading. But if you are trading with a trend, okay. Yeah. Counter trend trades. Is it the problem of counter trend trades? Also here, same thing, you know, liquidity taken out, and then looks like a counter trend trade price coming and then dropping. But you know what differs from this counter trend trade? It's because price did not take out the high, because the high that they formed right here, this one, is a different high. Okay, price fell and then created a new high and then fell, so which means that this becomes the new high. So what must price do? Take out the high for us to see buy. Okay, so that's how we find counter trend trades that are a little bit high probability. So this price took out here and then made this small retracement and then boom, and then took it out here. It's a change of character, retracement, boom, we buy here to take it all the way up at least to this area right there. So that's a better risk to take, I guess. So the only thing that can, you know, mess up the trade is momentum, because GBP USD has pushed now a lot, you know, pushed a lot. So will Euro USD have strength? So now we are about to see the London session opening up. So what time is it now in New York? Let's see. There you go. So the time right now in New York is about to be 8:30. So the New York session is starting. It's 8:41. The New York session has started. So around 9:30 in the New York session, then we'll be seeing price, you know, heavily moving. So either we see heavily movement to the opposite direction in the retracement, or we just see price, you know, collapsing down. So with what we have now come up with technically, what makes sense is to see the counter trend trade on Euro USD. So I'll be trying to go live every day, either in the London session or the New York session, and I'll try to go live for a few hours. Like today's live was 2 hours or 1 hour. That was actively, you know, speaking with you guys. Why are we doing this? It's also brand awareness. Okay, we're doing this for brand awareness. Nothing is for free in this world, guys. So if you see traders going live, don't think that they're going live because they're kind. Is brand awareness and also giving free information to the community. Why do we give free information? Because we give free information so that people can be able to trade, you know, because not everyone can be able to join the private groups and the private mentorship and private stuff, you know, where we show our exact entries and our exact risk models, and we, you know, share with you all the deep stuff. So we would, you know, be going live. The plan is to go live for now. Today is the 22nd of June 2026. So it's to go live up to the 30th of July. Some days I will not be live, some days I'll be live, but I will try my best to be consistent with going live every single day, so that I can maximize the time, the screen time for you guys on the channel. Yeah. Let me just share this to my Instagram. Did you guys enjoy today's live? Did you enjoy today's live? Did you learn something from this live? Do you guys have any questions about prop firms or anything? Any questions specifically for prop firms, or, you know? And did you guys join the Telegram channel? Did you join the Telegram channel? Did you make sure that you're part of the Telegram channel? The CCI Telegram channel. So let me also just share all of these setups that we have made for you guys. Let me just share them on. So if you're trading prop firm accounts, make sure that you don't put stop orders, okay? Like buy stops, sell stops, and all that stuff. Because when you put on buy stops and sell stops, what if there's news, high impact news? So when there's high impact news, then you get disqualified because you open the trade during high impact news. So it's important to always check your economic calendar. Look at your economic calendar and make sure that your things are in order. Because imagine now getting a funded account just to lose it. Okay, funded accounts are not traded during news events. Okay, unless you're trading live capital, then you can. Oh, okay. Cleared some confusion. It was amazing. Yeah, that's great. Yeah, like, so every day that I would try to go live, or the days that I would try to go live, then you guys will be like getting some stuff cleared and some stuff still, but with time you will you will. You guys will be getting what you need. And the stream's quality also will change with time. We'll be working on that stuff with time. I think this is the end of this session because I have some stuff I need to do. Yeah, I have some stuff I need to do. So with that being said, guys, thanks for being on the live, and see you on the next one.